day all. Ira Epstein with your financial market update, and this is your review for Wednesday, the 15th of May, 2019, and we're just getting on to 3:40 p.m. Central Daylight Time, so you're going to settle near these prices today. That'll be the very area that you're going to settle at. Things got very quiet just recently, so I can catch up. I have a favor that I don't often ask of my viewers, but I'm asking it of you. Do you know friends that might be interested in this? Just pass on. Go look at Ira Epstein on YouTube. Send them a link. Send them whatever it is. That's what keeps this going. I want my numbers to keep going up. Very important to me. Remember, I'm not charging to do these. This is all my expense, my time, and it's a lot of time, believe it or not. So let's talk about today. You know, one of the things that happened today, and wisely, the president decided not to fight with Japan and Canada at this point in time. So he's putting abeyance tariffs on automobiles. That's smart. Now the steel and the aluminum tariffs have to be dealt with, so we can get to the point where if those get settled, he can take this treaty to Congress and let them step over themselves as to why a good deal shouldn't be made. Even Ms. Pelosi has asked labor law changes out of Mexico that have occurred. Where are we on all this? Put it back in Congress's hand. It's politically and, of course, economically, we want our two partners. Together, we are stronger. Do you think Canada, Mexico, Europe, they don't want China to stop stealing their technology? The reason China's so big is it steals everything. Have a great idea, manufacture where the lowest cost is. Problem is their economy has grown. I'm not convinced that's the lowest cost. And businesses might decide to move, and those that move will hurt them to the point where they should deal on the same plane that all of us do. We don't steal each other's patents, things of that nature. They do. All right, so let's get to the marketplace. You can see the stock market rallied because the president, if you will, sidestepped an issue. He had to make a decision by Saturday, by the way, so it wasn't of his grace. He had to make a decision. As you can see, the market's been in a slope of a correction. Okay, so you're down about 1% today, or for the week rather, in the market. It's nothing big. When you look at today, you're down 0.6% overall in the marketplace. You've had a correction. You're sitting here right now. Have we corrected enough? I don't know. This is a bounce. I'm not convinced it's more than that in a market that has reasons to go down, and it's a headline-driven bounce. It's not because of the fundamentals. If you saw today's economic data, and I felt like I wrote a paper on it today, there was so much to put out there. China's slowing down. We're slowing down in manufacturing. I can go on and on through all this. It'll be interesting to see how housing does with interest rates that keep falling. We are in that spring season. This is when they should get bought. And we've seen those long-term mortgages definitely take a big step back. If we take a look right now at the swing line, just as math, take the name off the chart. Lower highs, lower lows. That's bearish. The market hasn't yet made it to the 200-day average of closes. That was this area that I've said if the market breaks through these lows, that's what I think the market is going to test out. What it instead did is it got under the Bollinger Bands, as you can see, came back over it, got back under, came back, and today back over it. But nothing's conclusive. You're just riding the band, and at the same time, you've taken this narrowness that you had right here, you're widening it out. So you're putting pressure on the market without collapsing the market. That's probably, the best way to say it. In terms of momentum, you're admittedly oversold. How do you correct an oversold condition? There's two ways. You either go sideways or higher, or you embed by taking both numbers under 20, just like you embed when you take both numbers over 80. When you get over them, that normally means you're going to get an upslope. If you got under the 20, it means a downslope. It's saying we're not ready to crash. I'm oversold. Let me correct a bit. In order to correct, both numbers have to be over 30. 2909 is very close and 30.85. So any more of a rally probably gets the market out of being oversold, as I define it. In the NASDAQ, again, we didn't make it to the 200-day average or the 100. Same thing as in the S&P. You fought a battle against the Bollinger Band. You widened out from the sideways action. You're getting a bounce, but there's no change of trend here. To knock the downtrend out, you've got to get back over the 70. Well, here's the number. Let's not guess it. You'd have to take out 76.98. Got it? And you're right now at 75.33. It can happen, but from here, that's quite a bit of a rally that it's going to have to put on. In the Dow, you went down and you did hit both the 200-day and the 100 and came back to climb over the Bollinger Band. There's nothing real bullish about that. The market found support, by the way. It's oversold, and that's keeping, I think, the bears at bay here. But there's nothing I'm yet seeing on the chart friendly. Let's assume that you got up here and over this number, just for the sake of the discussion, 26,079. Well, then I'm looking for the resistance at 26,202. Would that put the trend up? No. Why not? Because you have a lower low, and if you went up tomorrow through that number, all you'd have is a higher high. I'd still see the resistance there. In the Russell, you went down to the 100-day average, not the 200. The chart pattern here is a bit different. The resistance levels are between the 200 and the 100-day. You'd have to get all the way up here to 1594.20 over that to negate the trend. Again, you could not start an uptrend. You'd have a lower low, higher high. I see that as the resistance. In looking at this market, similar to the S&P, 29.20 and a 34 reading. Any up tomorrow, you won't be oversold. I think you're going to bring out the bears if the market gets up there. In the VIX, I think I was very clear in saying the other day that I think now the bears are back into play against this upper Bollinger Band. Once you got past knowing the Chinese deal, and that was this pop here, the fear, that put them back in. And what's the closest moving average? The first one's the 100-day. That's probably the first area that they're covering. Any calls that they wrote there, maybe we can get to the 18-day, but I think the smart play was coming out right there. And I'm not saying that, I don't know that they're doing that or not, but I'm noticing that phenomena. In the T-bond market, are we going to embed? It's overbought as can be. Both numbers, as you can see, are over 80 today. Both were over yesterday, but not the day before. You need 3 days. So the odds don't favor it. That's number one. So that tells me the market should back off. But the trend is up. Higher lows, higher highs. This is called riding the upper Bollinger Band. Until you prove to me that it's not going to embed, okay. Is there anything bearish here? Well, you can end the uptrend if you take out 149 in 2/30 seconds, but you can't start a downtrend because you've got the higher high today. In the T-bonds, T-notes rather, 10-year notes, riding the upper Bollinger Band, same identical thing going on here. Both numbers over 80 today, but they weren't there yesterday. So the bond market has the better shot of embedding than this market. These are overbought. If they get one day over, then the next day under the Bollinger Band, but they're pushing it out to the upside. The market is saying lower interest rates are still on this horizon, and you see that in the very popular ETF TLT, as it is riding that trend higher. And again, even if you were to take out this low, right here, this yesterday's low, which is 125.20, it would not start a downtrend. It would end the uptrend. You'd have the higher high, lower low. Are you embedding here? Well, both numbers today over 80. Over 80 yesterday, not the day before. So I think Thursday's an important day in the Treasury instruments. In the dollar index, I know it doesn't look like it, but what the dollar did today, it got sneaky. And it got itself up high enough to take out 97.49. The high was 51.5. I thought the market was really going to stop at the 18-day average and back off. I was wrong in that thinking. Now we've got a pattern of a lower high but a higher low. Lower low, I want to say that right, but a higher high. You're out of a trend and you're fighting the battle at the 18-day average of closes. In the euro, you just managed to avoid taking out this 112.7.5. You got down to 112.8 and came back up, but you're not over the 18-day average. Close over that 18-day average, and I think then the swing line's up, the bias up, and that might get momentum to turn up. Momentum's flattened out on you. Do you see that? Remember, momentum often leads price. In the British pound, if you knew nothing else, market's coming down. It's oversold, downtrend, Battleground, the 100-day 18, maybe if it extends, it gets to the lower Bollinger Band. And my rule is the first challenge of a Bollinger Band, especially in a pattern that's not going sideways, is often a zone where the pros take money off the table. Can't say it's not going lower, but I can tell you it hit that Bollinger Band. Japanese yen. If you lose this reading, right now both numbers are over 80, right? They were both over 80 yesterday, both over 80 the day before and the day before. So you have an embedded reading. If that red line closes under 80, I think the first number you go to is the 100-day average, and if it picks up momentum, you're back into play possibly for that 18-day average. Bitcoin, spending a lot of time over this upper Bollinger Band, probably too much. So I wouldn't be surprised to see an attempt for it to pull back, but this is a bull market with an embedded reading, and the public has taken notice of it, and this kind of market can do anything. You do know that the Chicago Board Options Exchange has given up on this, and their contract will start delisting. There's no new contracts coming on shortly, so this is the game in town that traders are working with. So let me think about it. I'm in Iraq, and all non-essential personnel have to come out, according to the U.S. That was the doctrine. That should move that spread out because it doesn't impact the amount of production we're doing in the U.S. The EIA and API numbers were both bearish. But you get a war threat, and that's exactly what that is. You don't tell personnel to move out unless you got a war threat. Well, you're fighting your battle right here at the 18-day average. The trend is up. You've got the higher lows, higher highs. The bias is up. Looks like you're going to close over the 18-day average. And you've got momentum pointing higher. That ends if you take out 69.93, but until it ends, it ain't over. So is this market going to get a pop? If it does, the first zone I'm looking for is that 74.17 level in the Brent. WTI's different story altogether. This is a divergence market. You've got first off, the higher high, the lower low, you're under the 18-day average, and you're trying to pick up momentum. I don't know what to do with that. Gasoline. Gasoline's important here. Lower highs, higher lows. You're out of the downtrend. You haven't begun a new trend. If you were to close over or the 18-day average and take out 2.0054, I'd have the higher lows, higher highs, bias up, momentum's already pointing up. It's easier in this market now to get bullish than bearish. In nat gas, I think the upper Bollinger Band got excessive on the market. Not hot weather just yet. It's going to get warmer. There's no question. I'll make that bet with people. Higher lows, higher highs. Support might come in at this 18-day average. The market's ahead of itself and being overbought. Looks like it wants to pull back. You know, one of the things that I've told you about that I do, and I'm having the ball doing it, is I'm now up early. I'm recording at 6:15 in the morning, 40 futures charts, 5 ETF charts. And the charts look just like this with these studies. Window envelopes, the swing lines, Bollinger Bands, more things than you're used to seeing probably. And the colors are this way. And the reason is they're easy to see on your screen. Have a cup of coffee. I wish I were there with you. I'd have it right with you. My coffee cup is next to me. I cover all these markets, including the metals. We've got to put that in this. My staff's here, and they know I keep laughing about it. But here's the difference. I'm assuming you've got your own trading ideas. And I'm saying to myself, if you're like me, you're looking to talk to somebody about an idea. You know, we're a whole office here of brokers. You want to go to the bathroom. Everybody's asking me. I'm asking them. What do you think? What's your opinion on that move? You don't have that opportunity. You're either calling the broker you're probably paying something for to talk to you about a market. It's no longer a self-directed account if you're doing that, or you're just reading as much as you can and so on. If you're watching these videos, the odds favor that you already think I know a little bit about charting. Because of that, I'm able to do things. Now, because you need a subscription to see this, I don't have to hide behind anything. It's not on YouTube. It's nowhere for the public. I can talk chart action as a pro, what I think active traders are doing. It's 6:15. I've already seen what Asian news is and European news. This is going to be out before the 7:30 a.m. Central Daylight Time that the government reports in the U.S. start coming out. So I'm ahead of the game, and that's what traders wanted me to do. I used to put it out closer to 9 o'clock, figuring they wanted it after the government reports. They wanted it ahead of time. So I did it. And since then, it's big positive for the traders in terms of that's what they wanted. And now I can do what I really love to do. Buy here, sell there. Here's your stop. Look for this market here. If I see a pivot point idea, I can put it on there with you. It's like you're sitting there next to me, and if you had your own idea, I'm either saying a reason, yeah, why aren't you going ahead with it if you think about it? Or you're on the sideline and I'm bearish, you're bullish, you're going, maybe I'm going to hold off. That doesn't mean you weren't right and I'm the one wrong. But that's the concept of what this is about. Is it expensive? By design, it's dirt cheap. It's that simple. What I charge to try it out, that's the first thing, is 26.5 cents a day in your commitments for 30 days, period. If you want to stop your subscription, you can do so. After that, if you want to go to every 30 days, it's $15, or you can do it for a year for $156. Your call. But in terms of learning about it, go to our website, www.iraepstein.com. Take a look at research or under education, Ira's morning subscriber video. Read about it. Tells you everything that you need to know there. Give yourself a $7.95 trial. I'm Ira Epstein. You have a good day. I'll talk to you tomorrow.